Hi, I'm Andy Temte, and welcome to the Saturday Morning Muse. Start your weekend with musings that are designed to improve financial literacy around the world. Today is July the 26th, 2025. Today, we're continuing our journey through the evolution of banking and money. Over the past few weeks, we've explored how the Knights Templar revolutionized medieval finance during the Crusades, creating the world's first international banking network with their ingenious letters of credit. We've seen how the Medici family transformed banking in Renaissance Florence, Italy, through unprecedented client service, radical transparency, strategic political connections, and the game-changing innovation of double-entry bookkeeping. I know it sounds boring, but it is really an innovation. But today, we're taking the next logical step in the story, the birth of the banknote. This isn't just another incremental improvement. It's a leap that would fundamentally reshape how money works in the modern world. To understand why banknotes emerged, we need to recognize the limitations of medieval and Renaissance banking systems. The Templars had solved the problem of safely transporting wealth across vast distances, but their letters of credit were essentially customized documents, each one unique, requiring verification against specific records held at Templar facilities. The Medicis had created a more sophisticated network with their promissory notes, but these instruments still faced critical constraints like Number 1, limited circulation. Each note was tied to the specific reputation and creditworthiness of the issuing merchant or banking house. Number 2, they had verification challenges. Recipients had to assess the reliability of unfamiliar issuers. And third, there were scalability problems. The system worked well for established merchant families, but couldn't easily expand beyond these trusted networks. These weren't small inconveniences. They were fundamental barriers to commercial growth. As European trade expanded in the 17th century, merchants needed something more standardized, more widely accepted, and more scalable than individual promissory notes. The solution to all this emerged in 1694 with something entirely new, the Bank of England. Unlike the merchant banks that we've discussed, this was an institution born from England's desperate need to finance King William III's military campaigns against France. Of course, a war is involved. Parliament authorized the creation of the Bank of England with a specific mandate: raise £1.2 million for the government and in return receive the exclusive right to issue banknotes backed by government credit. This was revolutionary thinking. Instead of relying on individual merchant reputations, banknotes would be backed by the full faith and credit of the English state. The Bank of England's first banknotes were handwritten documents, as you might expect, individually crafted by bank cashiers. Each note was signed, numbered, and recorded in meticulous detail. But here's the crucial innovation. Unlike the Templar letters of credit or Medici promissory notes, these banknotes were designed to circulate freely among the general public, not just between specific banking partners. Now, the Bank of England's banknote system introduced several revolutionary concepts that solved the problems that we've identified previously. Number 1, standardization. Unlike individual merchant notes, Bank of England notes followed consistent formats and denominations, making them instantly recognizable. Number 2, government backing. The notes that the Bank of England issued carried the authority of the English state, eliminating the need to assess individual creditworthiness. Number 3, there was the convertibility challenge that was solved. Initially, these notes could be exchanged for gold or silver on demand, providing tangible value backing. Number 4, there was systematic record keeping. Building on the Medici innovations, the bank maintained comprehensive ledgers tracking every note issued and redeemed. And finally, the notes had legal tender status. The government's backing meant that these notes had to be accepted for transactions throughout the English network. Most importantly, the Bank of England established a new model where banknotes promised specific amounts of gold or silver held in the bank's reserves. Unlike individual merchant notes that relied on personal reputation, these government-chartered banknotes could be trusted because they were backed by actual precious metals and the legal authority to honor those conversion promises. This is what we now call the gold standard. Most importantly, the Bank of England represented something entirely new, a central bank. Unlike the merchant banks that we've discussed, the Templars managing funds for specific customers or the Medicis serving wealthy clients, a central bank serves an entire nation's monetary system. The Bank of England had the exclusive right to issue banknotes for the government, manage the national debt, and serve as the government's banker. This centralized approach to money creation and management became the template that other nations would follow and the system that we see today. In the United States, our central bank is the Federal Reserve. Now, let's draw a line from those first handwritten Bank of England notes to the currency that you have in your purse or wallet today. Every piece of paper currency that you carry represents the same fundamental concept as those original banknotes: a standardized promise of value backed by governmental authority. Whether it's a dollar bill, a euro, a pound note, you're holding a direct descendant of that 1694 innovation at the Bank of England. Now, the similarities between the currency you hold today and the currency from the Bank of England back in 1694 is that modern currency still functions as government-backed promissory notes. Second, standardization remains crucial for widespread acceptance. And third, detailed record keeping continues to underpin the system's integrity, though the purpose has evolved from tracking precious metals reserves to managing monetary policy and preventing counterfeiting. But the differences between the money you hold in your pocket and that first currency from the Bank of England reveals how far we've traveled. Mass printing replaced those handwritten notes, enabling global circulation. Next, sophisticated anti-counterfeiting features protect against fraud. All bills issued around the world have these anti-counterfeiting features. Number 3, digital tracking systems monitor currency flows in real time. And finally, while the gold standard has been abandoned, modern notes are what's called fiat money, as we discussed back in our June 28th Muse, relying on government trust alone rather than being convertible into precious metals. Now, here's the most important realization. When you hand somebody a $20 bill, you're participating in a trust system that began over 300 years ago, or maybe it didn't begin, it was significantly refined 300 years ago. That bill explicitly states that it's legal tender for all debts, public and private. It's literally an IOU from the U.S. government to you, the bearer. So, next time you reach for cash, remember that you're holding a piece of financial history that connects directly to those revolutionary banknotes first issued in London over 3 centuries ago. Until next time, I wish you grace, dignity, and compassion. My name is Andy Temte. This is the Saturday Morning Muse. You can find the show on all the major streaming services as well as out on YouTube. Please like, subscribe, rate, and most importantly, share this public good with your friends, your colleagues, your family, and your neighbors. The show was produced by Nicholas Temte, and we'll see you next time on the Saturday Morning Muse.